Hello traders, welcome back to my YouTube channel. I've shared with you guys in this channel over and over again how I've grown accounts, very small accounts, and I've been dropping the videos this channel. So you can see this is a result of some of the trades that I've taken. Yes, in the past week I've filtered my profits to go up and my losses to be down. All right, but if you look critically, you are going to realize that if I lose, I just lose a little, and when I win big. That's to say that there's no way you can trade without making losses, but at least you can exploit the market and then you make your profits bigger, and at the end you see that you are doing big things. So I'm going to be sharing with you a simple but powerful volatility 75 scalping strategy today. And in this video you are going to see something you might not have seen before with moving averages. All right, moving averages differs from the way they react. So it could either be exponential or simple moving average. And if an exponential moving average has a way it reacts different from the simple moving average, as the numbers differs, so do their reaction differs. So we have to understand that aspect. But in this video, in this context, I'm going to be talking to you about the 50 and the 21 moving averages. So I will show you something very unusual. If you look at my chart very well, you will realize that price is in an uptrend here, and you can see that this moving average that I've selected the support price here. So you see that when price comes, it hits, it gets rejected just at this moving average. Okay, just imagine you knew how to select these moving averages and set them up, and you are able to take a trade like this. And then just imagine you're riding this trend. Imagine you took this trade too and you're riding it. How much profit you are going to make. So that's what I'm going to be sharing with you guys in this video. Okay, so let's kick off. Before we start, I'm going to give you two rules in which I use in taking trades based on this strategy. All right, number one rule is that the market has to be trending. When they say trending, this is a trending market. Price is forming higher highs, higher lows in an uptrend, and in a downtrend, price is forming lower lows, lower highs. That is the number one rule. All right, so now let's head to adding our moving averages, and I will show you those specific moving averages that I want us to work with. All right, so when you click on the F icon at the top of your screen, you are going to click on the moving average. So this is the moving average. So when you click, you are going to see a couple of indicators here. So we are choosing the moving average. You can see the MA. So we choose it, select the number. This is where you edit around the period. That's where you enter your moving average, the number of the moving average. So we are choosing 21. All right, shift 0. Here there is simple exponential, small linear weight, but we are going to work with the exponential. Apply to close. All right, so take note of this exponential close. So you can choose your pixels, choose any color of your choice, but you have to take note of which color you choose. So this is the 50 moving average. You click again, you click on the F icon, you add this indicator. This period, at this time around, we are going to be taking the 50 moving average. All right, shift, we are equally choosing the method to be exponential. Apply to close. Here you take a color of your choice. All right, you click on done. You are going to see indicators appear on your chart like this. All right, this is the two indicators. All right, so secondly, I've had questions from many guys around this community asking me which time frame. I will mostly prefer using the 15 minutes time frame. All right, so after we have added it, we see that there are times when the market is trending, there are times when we see market ranging. All right, but there are times when the market is most trending. When I say more trending here, I mean it is very steep. Like a situation like this, you see price momentum very high up. These are the situations where we'll be looking to use this our indicator. Remember, we are not just entering anywhere, we are not just using the indicator anywhere. There has to be high momentum like this. You see price moving, and you see how price is steep, so it's almost vertical. All right, now when you do this, what you do is you now come to your moving averages. So I'm going to show you two ways in which you can enter. All right, these moving averages are going to be acting like support and resistance, just like in the trend line strategy. As you can see here, this is a support. it's acting as support because price in an uptrend. Sometimes it is this red, remember this is a 21 moving average, this blue is the 50. All right, sometimes price reverses and then finds support around the 50 moving averages. Okay, now what we do is, in a situation like this, the first way we enter is that when you see price moving in an uptrend like this, all right, so you see price moving in an uptrend like this, it comes and then you see a strong reversal like this one. Okay, you wait for price for this red moving average to cross this moving average here. When it crosses to the upside, you take your buy order. All right, you take your buy order here, given that you see that after when price came here, you realize that price came, it got rejected, it came back, it gathered momentum, and when it broke the zone, it came back. Now it retested. You can see how the trend line acts as support and resistance. So after it retested the zone, you see this rejection candle here. In this situation, you take a buy, you place a stop loss below. You don't have to stay long in the trade because you know it is a scalping strategy. Now that is the first way of trading using this method. The second way is that you wait for price to move. You realize that when price came here, started consolidating, it came back here, and then you see that it found rejection. You see this rejection candle. See how price got rejected around here after hitting this moving average. It's just as simple as that. Now here you take your order, you place your stop loss below here. You see that your price move, you see how price move with a lot of momentum. This is because we choose a scenario where price was in a very trending mode, that is the momentum was very strong. So you see that even if it comes down here, our stop loss, our risk to reward ratio is high. All right, so you see how price move, and after it came, now it broke the zone. You see that it came here, so we didn't get the touch. It came, now it broke down from the zone, and then you see that the trend changed. But you see a scenario like this is not a good scenario to enter. Remember our rules. We are entering in this kind of situations. You see how trending this, you see that here, you see how market moves here. It's not really that you don't see the momentum like in this situation. So we allow this situation and then we look for another trending situation. All right, look at a situation like this, for instance. You see how price is moving. Now this is a perfect trending market. We can see that as price move, it accelerates with momentum, it reverses, it accelerates, it reverses. You can see it creates a higher high, it comes down, it creates a higher low, it creates a higher high, it creates a higher low. Now I'm going to show you another way in which we are entering. This is price action that we are combining with these indicators. Here we are going to use our Fibonacci retracement tool. All right, now you see that here when price crossed here, this could have been a possibility to take a long, but you see, all right, see that as price moved up, it came down, got rejected here. This could have been a good long trade. You see, it moved, it break the previous low. So if we enter here, we are going to place our stop loss below, and then your TP should be around the previous higher high. All right, you don't want to be greedy. Now we know that price is moving in swings, it moves and reverses. What you do here is that you use our Fibonacci tool to confirm. We click, this is the Fibonacci tool, you click on the plus icon, you are going to see Fibonacci retracement. This is a tool here called the Fibonacci retracement tool. You click on it, drag from this low, you drag to the high. All right, from low to high. Normally we use the 61% and the 50 Fibonacci retracement level in trading. Those are the percent, the points where price reverses. So you drag from the low to where price is currently at. Let's say we are considering that price was still around here and it started reversing back. All right, now we wanted to know where price will reverse and the reversal will be completed. Now when you drag, you use this Fibonacci tool from here, you drag up to this zone up here, you place, you are going to realize that price is going to reverse. Sometimes it reaches the 50, sometimes it reaches the 61. These are the two major levels. So you realize that this 50 Fibonacci retracement level is at the same zone where our 50 moving average is. So it gives us a double confirmation. And then secondly, you see a bullish engulfing candle. So it means we have three confluences. We have the Fibonacci retracement level at this zone, we have the 50 moving average, and then we have a bullish engulfing candle. So if you take a trade here, this is scalping, guys. If it moves up to this zone, even if you exit here with a good account size to a good lot size, you are going to make good money. You see, so let's move on. You see that price moved up from here, price moved again, and then it got to this point up here. Then it started reversing. When it started reversing, what we do is you just go and pick your Fibonacci retracement tool once more. This is it. I've already picked it, so that's why it appears on this toolbox here. So you click, you drag now from this low, you drag from here. So you just, once you click on it, you just come and click on this low. It's going to appear like this. Now you drag up, you put it around this high here. So you put it around the high, you are going to see it's going to mark out the 61, the 50 Fibonacci level and the 100%. Now you see price reverse back, it reverse and then it reaches the 61 Fibonacci retracement level. That's where we saw a good bullish engulfing candle, and you realize that it is at the same zone where we have the blue moving average, which is 50 moving average. So you see, we take our trade here, we place our stop loss below the zone. It should not be too tight, but it should not be too further away. So we place that here, and you see its price move. Even if you take your TP here, you place your TP here, it's not bad. All right, this is scalping, and some people who trade, they usually take multiple trades, and by the time it reaches here, they are in deep profits. All right, so even if you don't take your TP here, you might lock your profit. When price move and then it reach here, you move your stop loss from this zone, and then you put it around you break even, what we call break even. You move your stop loss from here and you place it at your entry point so that you can continue to ride the train. So you can see how powerful the strategy is, guys. You see how after that, you see how price move up. The fourth time it got rejected. All right, because of the long trend, you cannot use the Fibonacci retracement tool. You see that if you had entered here, you see a doji candle, what we call the evening star. You see these three candles, a long candle and this, and after that you see an evening star, which is the three combination of candlestick pattern. So if you entered here, at least here we would have been in deep profits. All right, so you see how powerful the strategy is, and as price move, you can take your TP here or you lock your profits, and that's how simple it is, guys. I hope someone has learned something. This is a very powerful strategy. This is a price action strategy combined with moving averages, and we enter your trades based on uh, 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 multiple confluences. So you also have to bear in mind that sometimes price will come and then break down. For instance, price can come in some situations. I see the red bearish candle break down right and close somewhere below here, but we will not conclude until we see another candle. Sometimes you see another bullish candle, it engulfs back the bearish candle and close above. When that happens, you don't consider this to be broken, so you can still take your order. So I'm saying that because those are situations that sometimes they do happen. Sometimes it breaks forcefully and sometimes it doesn't break. So that is how the strategy is, guys. Thank you for watching. Always make sure that you stay cautious. Always make sure you use your stop loss, because anything can happen. Thank you for watching. Please, if you are new to the channel, subscribe, click on the like button, click on the notification bell, so that whenever I post a new video, you are going to get updated. Thank you. See you in the next video.